LTIMindtree came out with numbers which were in line with street expectations, in fact, modestly higher on the revenues and on the margins. The problem is that this was a company which was seeing very high growth. Then they slowed down over the last 1.5 to 2 years. And the question is, when do they bounce back? And the second problem is, and as of now, there is no clarity about the company getting back into the leaders quadrant. They're not coming out and categorically saying that, this is next year onwards, we are back to our phenomenal growth track. And secondly, margins for the company have dipped very sharply. Their aspiration is 17 to 18%. This quarter, they've done 13.8%. So there is a big mismatch. Margins are much lower compared to where they want to be and even compared to peers. But for them, the good part is BFSI. They're heavily indexed to BFSI and discretionary spends, which is why they got hit the hardest. But now if BFSI is recovering, and there is evidence of that from what we've seen so far, then LTIMindtree has, scope to start doing well from here. But in fact, we had a chat with the management on all these questions. Debashis Chatterjee, Managing Director and CEO at LTIMindtree. Listen in to our conversation with the management.
As far as the overall quarter is concerned, the quarter is quite positive. We had a record order inflow. We had a decent growth, and coming specifically to margin, as you rightly called out, we had a wage hike across the board, and we had called out around 200, around about 200 basis point impact. We had a 220 basis point impact, out of which we clawed back 50 basis points to our operational efficiency. That's what you see in terms of the EBIT. And there is a bit of forex as well as treasury income, which did not come in line. That's what is impacted in the PAT. But as far as the overall plan is concerned, we have a very robust plan and program in terms of improving the margin as we go along, and that continues. So I can only say that there is absolute focus in terms of improving the margin as we go along the next few quarters.
But just over the next 3 to 4 quarters, can you give a sense of how much you will be able to improve margins?
Well, it also depends in terms of how the growth comes back, because margin is also a reflection of the growth. I can only say that there is a plan, but if the growth comes back, say, for example, double digit in the next year, then the margin improvement also will be happening in line with that.
So when do you expect growth to accelerate to double digit? Do you think FY26 is likely, or given the visibility that you have, the demand environment, that could be pushed further out to FY27?
Well, I think let me tell you what I know. At this point of time, if you look at our overall performance, last 2 quarters we had the growth momentum which came back, which continued into this quarter, and we are confident that the growth momentum will continue into Q4 as well. If you look at the order intake that we have, it is quite robust, 29% improvement in terms of our order intake this quarter on a quarter-on-quarter basis. Year-on-year basis, we had a 10% plus improvement. So given all those things and the fact that all this will fructify into revenues, the next quarter may be a little effort in terms of transition. But overall, we feel very confident that FY26 will be better than FY25. Now, in terms of telling you anything further, I need to wait for the client budgets to be formalized, which they're still working on. And once we get better clarity, then we will know exactly how it is playing out. But at this point of time, I can certainly see that FY26 will be better than FY25.
And you're saying Q4, the growth momentum is continuing into Q4. So Q4 growth rate should be similar to Q3 or better?
Well, I think, if you have listened to our commentary, we called out a few things, like we had the impact on furloughs, we had the impact on forex, we had a lesser number of working days, and also we have been talking about passing back some productivity gains to our one of our top client. So that will continue into Q4 as well, some of that. And but having said that, there is growth that we are expecting in other parts of the business. That's what gives me the confidence to say that we will at least continue with the growth momentum. But calling out specifics at this point of time is very difficult. But we are very confident that growth will continue into Q4.
What was the extent of the productivity gains which you passed on in Q3? And do you see this extending from beyond the top client to other clients?
Well, I think the productivity gain is something that we always knew it would happen, given the focus on AI and given the focus on, in fact, there are quite a few deals that we have won. In fact, last quarter, we announced a 200 million plus deal. And this quarter, again, we won a 50 million plus deal. And all these deals are vendor consolidations where our AI strategy is playing a very big role in terms of the productivity that we can offer to the client over a longer period of time. Now, having said that, we have also got a strategy which says AI in everything. So everything that we do for our clients, we want to offer the productivity gains and give something back to them. And the top client being a very large client, so obviously the number is slightly higher. So that's why we called it out. And we expect that this will continue. The full quarter impact of this will be there in the Q4. But having said that, it is not a reflection of any softness in business per se, because it is a reflection of the way we do our business. We expect that as we give the productivity back to the client, they will be also giving us more work based on how we are doing things in other parts of their business. So we feel that it will be coming in other places also, but at this point of time, the major impact is with the top client.
But could you quantify that? What was the amount that you passed on to your top client?
Well, I don't think I want to quantify that, but I can only tell you that it is certainly, a little, if you just do the maths, you will realize that it's an impact that we have in terms of our revenues, which is because of Forex, there is a significant impact, and there is a significant impact of the productivity benefits. We don't want to call it out, but as I said, that it will continue into the next quarter. That's all I can share at this point of time.
And
but in spite of that, we are very confident that we will have growth in Q4.
Okay. And you see this being passed on to your other big clients also, not in Q4, but say in FY26 onwards, the productivity benefits, the Gen AI related savings that you enjoy will be passed on to your big clients. That's going to be the strategy of the company.
Depends on the specific deals, depends on the specific opportunity, depends on what stage we are in. I mean, if you are doing a renewal for a particular client, definitely we will be looking at that aspect. But, one thing I want to just explain, that passing on productivity gain doesn't mean that we don't get revenues. We may probably get even more revenues because of our overall AI strategy that we have adopted. When we say AI in everything and everything for AI, there's a lot of opportunity that we are creating working with our clients. And this is only one aspect that we have to accept as we, ramp up our overall AI strategy across all the clients. I mean, the example that I gave you, which is a $200 million deal, which we closed last quarter, it's a vendor consolidation. And we have, come out winners in that. And we have applied our AI strategy very significantly in that deal.
So do you think you can sustain deal wins at this current mark of, $1.6, $1.7 billion going ahead too?
Well, every quarter is a little different. There are quarters where you have more renewals, so those quarters will be, and the way we look at our deal wins is not just quarter on quarter, but for the full year, is the order book better than order intake better than what it was in the last year? So from that perspective, we are definitely on track. And, at this point of time, I can only say that it's not only the order intake for this particular quarter, but even the pipeline is also extremely robust as we move into the next quarters.
The pipeline is better than what it was a quarter ago and a year ago?
I can only say the pipeline is extremely robust.
Okay.
And you will hear some of those things in this quarter as we go along.
Got that. So the reason for your high-tech declining was on account of the productivity gains passed on to your top clients. What about the other two verticals, retail and healthcare? What led to the weakness or the revenue decline there other than furloughs? And on BFSI, do you think now you can hit double-digit revenue growth on a year-on-year basis?
Well, I don't want to get into the double-digit part, but what I can say is that if you look at all my verticals, even if you look at tech vertical, all the verticals have actually grown on a year-on-year basis, so which is very promising. So that means the growth has been fairly broad-based. None of the verticals have declined on a year-on-year basis. And that's something which is important to us. There could be cyclical things in terms of one quarter to another quarter, but at an overall level, we are growing. And I think BFSI, we have called out that it has been a great bounce back in terms of growth, and that will continue as we go along. It has been a tremendous growth story in BFSI in the last 2 quarters, and that momentum will continue.
But you're not confident about BFSI hitting double-digit revenue growth. You're already at 7.5%.
No, I don't want to get ahead of myself. That's not the right way to look at it. I mean, if I can do double digit, why not? But why do we want to call it out when we know that the growth momentum is continuing and we should just focus on the growth momentum?
No. You've historically always been in the leaders quadrant, except for the last couple of quarters as things slowed down. You're calling out that FY26 is going to be better than FY25. Do you think you will be able to get back into the leaders quadrant next year?
Well, that's our aspiration. We have always aspired to, have a profitable growth story and be in the leader quadrant. And as of now, the robust pipeline, the deal wins that we have had in this quarter, as well as what we are seeing in Q4, definitely gives us the confidence that FY26 will be better than FY25, what we have seen. And even if I look at, especially in BFSI, there is a little bit of discretionary spend also, which is coming back. I won't say that it has come back broad-based across all sectors, and it's also a reflection of the portfolio of clients that I have. But some portion of discretionary has come back in BFSI, which also gives me the confidence to say that maybe at last, after 2 years, there will be some discretionary which will be helping us in terms of growth.